Hi, everyone. This is Jenny Bayless, and I'm here with Chris Lopez. How are you doing?
Doing great, Jenny. Glad to be here.
Yeah. So today we have Bill McIntosh. And 6 years ago, he started up Complete Protection Insurance. And he's an insurance broker, and he's able to help our clients figure out what their insurance needs are for their rental properties. And so he's a wealth of knowledge when it comes to insurance topic, which I don't know about you, but it's very confusing to me. So it's very helpful to have such a great insurance broker on my side to be able to walk me through all of my questions. So, Bill, thanks so much for being here today.
Thank you for having us. I appreciate it.
Yeah. So I was wondering if you could maybe just give us a little bit of background as to how you got into the insurance industry.
Yes. I was working with CenturyLink and I had a client who came in. He was an insurance guy through Farmers Insurance. And we just helped him really well. We did our thing, our customer service part of it. He turned our name in to the Farmers District Office, and they called us up and asked us if we were thought about doing insurance. And when I say we, my wife is usually a major part of this insurance. So when I say we, it's me and Kathy, my wife, and so we started thinking about it. At first, we kind of said no, and I started thinking about some of the things where customer service kind of was downplayed or didn't happen when it was talking about insurance. And I thought, man, if we could offer the same amount of customer service to our clients that we offer here at CenturyLink, it would be perfect. And I think we'd, be able to grow and do well in the insurance business. And so that's really what got us started, is just to add a level of customer service that I felt like was missing in the industry.
Yeah, that's great. I mean, as I mentioned, I think insurance is a pretty complicated topic. So to have someone that's willing to sit there and explain everything to you, I think that's a very valuable asset to have as part of your team, for sure. And Bill, I was wondering if you could maybe go into some of the main differences in policies that our investors might be looking at in terms of condos, townhomes, single family homes, and then multifamily homes.
Awesome. So condos are pretty simple to insure because what happens here in Colorado is hail and wind. And so in condos, your insurance, usually you pay a dues, and they pay for the outside insurance on the house. So they pay for the roof, they pay for the siding, and those are the pretty expensive parts to your coverage when it comes to condo or it comes to insurance. And so there are a few differences inside of there. With condos, there's can be a special assessment, and we make sure we're covering that to the best of our ability in the insurance industry, because it's super inexpensive to have $50,000 worth of coverage in case all the buildings got hit with hail damage and they had a 5% wind and hail deductible. As an owner, you get part in that. And so we get our special assessment coverage. We cover up to 50,000, but those smaller claims, and I say smaller, but when you're talking about wind and hail, the most I've ever seen was $11,000. Another part of that special assessment comes from like a swimming pool, and somebody passes away or dies inside of a swimming pool, then that can be very large, because there's a lot of insurance chasers, so attorneys and stuff that go out after those, and it could cost the homeowners a lot of money, because what doesn't get covered on the condo association gets passed to you, and then we've seen that go higher. So that's condo insurance. Condo insurance pretty much protects anything from the studs in, and with that, so you're also looking at some of your fixtures, some of your cabinets and things like that, plus your personal property. So if you are looking at, I would say between $600 and $900 a year for condos insurance, and it's based off your credit. It's based off of your location. Your deductible could be important in there, but not as much on condo insurance. And so, and then the rest is covered through your association. So It's pretty inexpensive. If you're looking at a monthly cost, that's not very bad with condo insurance. And then you have your primary home.
Sorry, stop. I got a couple questions on the
Yes.
condo because we buy a lot of condos. I think we buy a lot more in Denver than you in the Springs, but just some general questions on there. So when you're underwriting a complex, do you guys review the HOA policy or the HOA management? Does that have any impact on the policy that I would get as a customer for you, like how the HOA's current performance?
Yeah. So the coverage is pretty much the same with all HOAs. Now, what they cover sometimes can change, and so we try to look at some associations do better job of posting that information. Some don't. So we just start asking questions to get the information that we need if it's not posted. But yes, we take a look at what their current coverage is with the association, and then we build the policy inside of that. So yes, the answer is yes to your question. So.
The other question I have on here, because I've seen a few insurance policies like this have, I'm probably butchering the phrase, but they've had special assessment riders, for lack of better words. What's your opinion on those, and is it worth it? And do you have any, like, since you see a lot more claims and policies than we do you have a feeling for, hey, are they worth it, or kind of where's that risk to reward ratio? I'm paying an extra $100 for this rider to cover the event of a special assessment, and is it statistically worth it? So I know it's a very loaded question there. And I'm kind of curious. I've always gotten different answers on this. I'm always curious to get your opinion on here.
So the policies that we work with, the companies mostly always offer a certain amount of special assessment coverage, whether that's $5,000 or $10,000, and so that's kind of built into the pricing. To take that up to $50,000 might be $20 a year. So you're looking at less than $2 a month for that coverage. And if there's something very expensive, which insurance is covering the unknown, basically, if there's something expensive that comes out of a claim and they do a special assessment on you, it's really it's inexpensive to have it. You might as well take it and pay the extra $150 a month to get that taken care of.
And is that something, so if I'm coming to you to get a policy, do I need to ask about that, or is that usually automatically included in the policies that you underwrite?
Well, we underwrite policies how we would want to be insured if we were purchasing a home or a condo or something. And so sometimes we have coverage that we don't even really talk about until the closing, and saying, hey, you have this coverage, you have this coverage. It's on the form that we send over to them, the quotes, but we pretty much put that in every policy. And then if there's a DTI issue or something like that with the mortgage brokers, we can start taking that out instead of starting at the bottom and not being able to do anything with the policy. And so it's going to be on our policies when we do it at Complete Protection Insurance. But I've seen policies not have it, and it costs somebody $4 or $5 grand because the insurance agent wanted to save them $150 a month. So
okay, thank you.
No problem. Thank you.
Yeah. So would you be able to explain some of the differences between the condos, which we really appreciate you going into a lot of detail with that, and then kind of how coverages and aspects to insurance changes between single family homes and then multifamilies?
So we do mostly personal lines insurance. So we go up to like as much as 4 multifamily, 4 units. We can find other carriers that will do more, but we've never been really asked more than 4. And so, but in that, so a 4-family and a single family, when it comes to you being a landlord, is really the same exact coverage. It's just going to, instead of 1 kitchen, there's going to be 4 kitchens. Instead of, 2 bathrooms, there might be 8 bathrooms. And that's how we put it together. Square footage, how many kitchens there are, how many bathrooms, really tell you how much it's going to cost to rebuild the house and what kind of quality build the house is. And so in that, so just know as a landlord, if you're purchasing a home, the coverages for a landlord policy are not the same as your homeowner's policies, meaning there's some special stuff built into your regular homeowner's policy that it's sometimes you can add it or take it off on a landlord policy, but you can't. There's some of it's not included. So instead of like with your homeowner's policy, you might cover personal property at like 50% of the rebuild cost is kind of the number. With a landlord policy, you can start as low as $1,000. And if you think about personal property, that would be your ovens, if you have washer and dryers in the unit that you paid for, you have a refrigerator, you want a little bit more coverage than that if you have anything significant in the house. And then I don't know if you guys do much Airbnb with any of your properties, but then you're putting all of your stuff that you would normally have in your house minus your clothes, and then you'd want really a little bit even more coverage, and that can get kind of expensive on the personal property. But the coverage for the outside of the house when you go past a condo into a regular home or a multi-dwelling, you have to cover the outside. And so the things that you want to look for is how old is the roof on the home, because the older it gets, the harder it is to insure, and also the more expensive it is to insure. Especially in Colorado, I'm amazed when I see a 20-year-old roof. It hardly ever happens, but they're out there, especially if they were somebody else's landlord property and they didn't want to spend any money when they're purchasing them. And I know that, Jennifer, you put a lot of money into putting new roofs on houses and stuff like that, and it saves you a lot of money in the long run. I think if you just keep on taking good care of your roofing and your siding and things like that.
Great. That's extremely helpful. Thanks so much for the detail on that. Would you be able to kind of dive into some of the unique attributes that properties in Colorado Springs encounter? I know you mentioned hail as being one of them. And I know you and I had chatted about landslides and stuff like that. Would you be able to kind of go into some of those unique situations that a home in Colorado Springs needs to, be aware of?
Yes. So in Colorado Springs, I think your major thing that everybody thinks about is the hail and the wind. I mean, we get some major wind coming off the mountains. If we've seen roofs, blow away, and I say just the shingles and stuff like that. I've never seen a whole roof blow away unless you were in the Midwest in a tornado, but we don't get tornadoes in Colorado Springs. It's a little bit farther out east that we've really seen an impact, for tornado. But that's all covered under wind and hail anyways. The landslide, that's kind of something that's new, and it's really something that's kind of been kept quiet, I think, because there's a couple of communities that are having issues with that, where right now they're putting tape around their house saying "Do not enter," because their house is sliding, and those are up against the mountains in the most case on the south side, and not every one of my carriers, because it's not been a big deal, even carry like landslide. You can't even add it. So if you're in one of those prone zones, you want to make sure you get a company. And from what I've seen, it doesn't cost a whole lot to add that. The big thing that we do is sewer and drain backup coverage, because my mom bought a house here. When she first moved here, we weren't even living here, but we came to help her move in, me and my wife. And that day we moved in, we all took showers, we would put our clothes in the washer, and we started the washer and left for dinner. Came back to sewage in the basement. And so you actually have to have sewer and drain backup coverage to cover that. And it's anywhere between about $90 to $160 for $25,000 worth of coverage. And those are very important to have here because a lot of the homes are 30, 40, 50 years old. And that means the sewer lines have been in there. That means the trees' roots are growing into those sewer lines. It's easy to get that coverage needed. So that's actually, so up until this year, what we've seen is wind and hail is being a problem, and then sewer and drain being a problem. This year we got that cold snap, and we've had quite a few broken pipes, and that's covered under water damage. It doesn't need a special coverage unless you have a weird policy, but most of the time it's covered under there. And then earthquake, we don't have a problem with it here in Colorado. I have asked some people that come here, when is the end of the times coming? I don't know when that's coming. So that's just a joke that I use with them because we don't sell it. If they're coming here from California, they're asking for it, and it's just really not worth it. And then flood. Flood is a very expensive insurance. I actually have started working with a guy that just does flood insurance. That's all he does. And so he can find private flood along with the National Flood Program. So if they're doing an FHA program, they right now currently they have to do the National Flood Program. I just got a quote back for National Flood from him. The only one company he could go through because it was an FHA, and it was over $4,000 for the year. Our coverage for his regular homeowners was $1,100 and something. So you can see where that could really screw up with a closing because of DTI or something like that, adding that much to the policy. But it's something you have to watch out for, and you can't get around it unless you're not doing an FHA, unless you're putting 100% down, then you can gamble on not having it. But if you're not doing FHA, then you can go private flood. And I've seen private flood only be like $800 to $1,500, and it can get higher than that. Obviously, if there's a more dangerous zone or something like that, flood zone. But that is something to watch out for, and maybe stay away from. If you're trying to make an income off of a property and it's going to be $4,000 extra a year, and you might not be able to charge that for that property, to recover that cost in there. So it might be something to stay away from if you have to.
That's a really good point. I never even knew that, I guess, the FHA loan had a different flood insurance requirement than conventional loans. So that's really interesting to hear.
Yes.
And how often, I mean, because I know up here in Denver, there's certain gulches and gullies with flood insurance. Is it pretty similar down the Springs where it's just, hey, if you're in these certain areas, it's very rare, but it's, there are a couple flood zones like that?
That's
Yeah,
exactly how it is.
Okay.
I probably, in the 8 years I've been doing insurance, I've only had a request for flood insurance 5 or 6 times. One was way up in the mountains. I don't know why they needed flood insurance, but it was $8,000 a year for them. And then I've had it again another 4 or 5 times, and out of those 4 or 5 times, probably only 3 other times have I actually sold a flood program policy because they usually just look for another place to live or to buy. And that's another reason why to look at that, because you want to resell your house eventually. Maybe once you retire, you want to take the cash and live on the cash. You want to be able to it be resellable, and a flood zone is going to limit who's going to purchase your home.
it's really good. Would you be able to go into actual costs versus replacement cost coverage?
Yes. So ACV is what it shows. So it doesn't really tell you what it is, or RCV. So replacement cost value is, to me, it's easier to explain in electronics terms. So you buy a cell phone right now, it's $1,000 for the cell phone. In 6 months, that same cell phone is worth $600. And so when it comes to your personal items in your house, the same thing is happening. So with replacement cost value, they don't pay you what is due on your phone now. They pay you for a new phone. So they pay you the $1,100 or $1,200 to get a new phone. Same thing happens. So on your house, the roof is it depreciates, so they're only, here in Colorado, probably 15, 16 years is the max, but they're known to have 25 to 45 year lifespans on them. And so the longer you go without replacing that with actual cash value, they're only replacing what it's worth right before the hailstorm. So if it was a $15,000 roof and it's been on there half of its life, they're only going to pay you $7,500 minus your deductible off of that. With replacement costs, now that's worth it's going to cost $18,000 to replace it. So they're going to pay $18,000 minus your deductible on replacement costs. So we try not to stay away from ACV policies as much as we can, because it's hard to give the customer a firm number that they can expect to have to replace their roof on. Where with a RCV policy, we can say, okay, all you have to do is pay your deductible. Your deductible here is $2,500. So then you keep $2,500 in the bank account in case something happens and your roof needs to be replaced.
Very helpful.
Well, is there like a rough rule of thumb as far as how much that changes the premium, or is that just vary on so many factors per policy, per property?
Yes. So when I was selling for farmers insurance, going up in deductible was a big difference. You might save $1,500 a year to go from a $1,000 deductible to $2,500 deductible. When it comes to independent companies, you might save $300 a year to go from $2,500 or $1,500 to $2,500. But it also depends. More and more our companies are doing higher deductibles for the wind and hail, and you can't even go down lower than $2,500. That's kind of the minimum that I try to start at, with wind and hail. But I do have a couple of companies that will go. I have one company that go down to a $500 deductible. And so I was talking to a lady, we gave her quotes, and it was a difference of like $150 for a $2,500 wind and hail deductible and a $500. And in the state of Colorado, if you're only saving that much money to get a $500 deductible, you should go for it. But if it's a big savings, the higher deductible, you just need to know I'm gonna pay more out if I save this money. And sometimes we see a significant difference, but it's not a whole lot of significance if we look at it. So,
What do you recommend that landlords pay specific attention to in regard to their insurance? And then also, if you could maybe explain how renter's insurance works.
Okay. So I think landlords should pay attention to their deductible, because they have a sneaky thing called percentage deductibles. And the reason those are sneaky are, so they might say 2%, which, that doesn't sound bad, 2%. That's all I have to pay. But if you have a $600,000 house, 2% deductible would be a $12,000 deductible, right? Because the rebuild, it takes that percentage off the rebuild. So a $600,000 house, you're paying $12,000. You might as well just not have insurance for the wind and hail part of it. So you have to watch that little percentage. Some companies even show a 0.5%, which usually that puts it right into where everybody else is. But you just have to watch and know what you're getting. And also, when it comes to the ACV and RCV, you have to know and understand the differences, because when it comes to a loss, that's not the time to start thinking about how much you're paying. You want to be covered, And so you really have to pay attention to that. So I think those are the two things. And I would always have sewer and drain backup coverage on there. And also, with our rates here are our landlord rates. So what you're making on a monthly basis, I would suggest covering that at least 1 year to 2 years in loss of income. And so that loss of income is also known as additional living expense. And so you have to know how much I'm going to get if I can't have a client in there because a fire or something like that. And I would do at least a 12-month to cover that, what you're losing out on if that client can't be in there.
Good to know. How would you kind of go about recommending renters insurance policies just from the landlord's perspective? Like, are some policies better than others? How does that work?
Now, they're all about the same, but what you're looking at with a renter's policy is their liability. And I would suggest that you put their liability at, require them to have a $300,000 liability. And because they can go on renter's insurance down to $1,000 or $100,000 liability. But if they do something stupid, that's the liability is what you're going to go after to, or your insurance company will go after their liability. But I would tell them to get a $300,000, and that's going to cost the client about maybe $1 more a month. So it's nothing. It's going to cost them big, but it gives you a lot more protection than 100,000 in case they go and do something stupid.
Like what would be the? I've never thought about this scenario, but I mean, all of my tenants, they have renters policies. So like, what would be the scenario where they do something stupid or they whatever, just something happens, whether it's intentional or not, they do it. Where would my insurance company go after them for something for liability?
Yeah, so it's subrogation is what it's called, and it happens all the time, whether it's auto insurance or something like that, where like somebody hits you and you file with your insurance company goes after their insurance. And so there are some things that are covered. If a fire starts because something happened that really wasn't the tenant's issue, your insurance would just pay that. But say the tenant left their roast in the oven, they left for the day, they forgot they had the roast in the oven, and it burned down the house. And that's pretty of a bonehead thing to do. That's when your insurance company say, well, let's go after their renter's insurance and have them pay some of this problem. And then you can actually go after where your insurance company might not go after something, like they do something intentional. There could be a chance where you could go after their liability insurance, and their liability would cover it. It's harder, but it's possible. And sometimes you have to have a lawyer to even move
But from to ask to kind of take the scenario out more, Bill. So let's say my tenant only has $100,000 in liability, doesn't take your recommendation, and he burns the property down. But if I got my insurance up to the proper amount, my insurance company, obviously they're going to go either get $100,000 or $300,000 from the tenant, hopefully. But regardless, my insurance company up to their limits is still going to handle the issue theoretically, right?
It could be that way. So I think
we might be dancing into, I know, some like lawyer territory here, but this is a nuanced insurance that gets me so like intrigued and slightly scared.
So no, I think you should always be scared a little bit when it comes to insurance, because we do our best sometimes to make sure everything. Yeah. But sometimes we don't know everything, and it's like something comes up and you're like, I can't believe, I can't believe I have 7 customers on that policy and it doesn't cover this, but that we have insurance for that too. So what you're talking about, it's really depending on if they hold them liable for the claim, because I'm trying to think. like say a dog goes in the bathroom and somehow gets the water on, puts a towel in the bathroom, so it's loading up water. You're gone for the day. You come back, it's totally flooded. So that could be where there wasn't intentional damage. Your insurance company would most likely cover that for you. Now they have to have their own insurance because of their personal property and stuff like that. Where, again, I think it's going to be difficult, but you have to have a liability reason to go against their insurance. They did something intentionally, basically, is the difference between the two. And again, you might have to lawyer up to get anything taken care of to do that.
So your example there actually made me think of a real animal example. This happened to a family friend years ago, but this was in their kitchen sink and they had a bunch of dishes in there, and they had one of those like motion sensor faucets where you wave your hand in front of. Well, their cat walked in front of the faucet, turned it on, and it flooded the house because I guess it ran for hours and hours. It was just one of the things you would never think of, and it happened. Wow. And it just ran for hours and hours, and the sink didn't drain because it was clogged or, just had dishes up on there.
And so that's where the insurance companies are really your friend also, because that's where they would probably go after the manufacturer of that faucet, because as soon as the cat she could have moved in front of it and it turned on, but it should have turned off at some time too, I'm guessing. And so
yeah, it should have run for 5 hours.
Yeah, it should have ran for 5 hours. So the insurance company would look at who's liable, and that's probably where they wouldn't find the cat liable for flooding the house. They'd find that there was something faulty in that. They would go after that manufacturer, and they would pay their part. You would be done. You'd be taken care of. But then they're trying to get their money back on the other end. And when they get that money back, that might mean you get your deductible back or something like that too.
Man, this is all stuff I've never even thought about, I guess.
Can I fire off like more random questions?
Yeah,
This is great. All right. So Bill, I know this is not what we planned for, but I started jotting down questions because you're obviously very knowledgeable. So we have clients, and myself as included, we will buy a property in our personal name for finance reasons. And then a couple months later, we will transfer the title of the property from, Chris Lopez to Chris's Rental Properties LLC for that liability buffer. Now, when I do that, what do I need to tell you, my insurance agent?
You just want that listed as an additional insured on your policy. Most personal lines policies, you won't be able just to put the LLC as the owner. So you just have to let us know that you've done that, and that puts them as additional insured. And so where it's the property calling in for the claim and not necessarily you, but it all gets deemed the same way. I think it's more liability wise, what you're doing is protecting yourself outside of insurance, with the LLC anyways.
So from your perspective, not a big deal.
No.
I've done it. I don't think it's affected my rates. Nope. It's just making sure you notify it and you get the updated insurance declaration.
Yeah, we've actually had insurance rates change like $3 or $4, or something, because you're adding extra work for the company, but usually it doesn't change it.
Well, I mean, $3, that's nothing. That's if anyone cares about that, they should not be investing.
Bill, would you be able to go over umbrella policies? Because I know, to kind of piggyback off of LLCs, the other question is, what about an umbrella policy? So just if you could kind of explain what that is and how it would protect the investor.
Okay. So the umbrella policy, so with investors, you might have a commercial umbrella policy where it covers just their properties. And so basically each of the homes that you have insured has, 100, 300, 500, a million, depending on what company you're with, that you can get in liability coverage. And so there's a claim, say the porch falls in while they're walking across it, and there's a claim there that they want to come after you because they got hurt. And that liability is covered up to whatever amount you have. A lot of our companies do 500,000, so we put 500,000 on there. They can't walk the rest of their lives. It's a $2 million claim. Umbrella is going to pick up anything above and beyond that. So you have $1 million. You can have, I mean, I've seen it up to $10 million. I'm sure some major corporations have even a lot more, but that would just add another million, another 500, 5 million, whatever that you have. And it's pretty inexpensive. I think, you know, there's a client of mine on this call, and I think they pay the most for umbrella that I've seen, and it's like $900 for $5 million worth of extra coverage for the year. So it's not very expensive, and it can really save you in case there's something bad that happens. And the thing that I think about liability coverage is it takes you out of the equation. It kind of makes it easier for you to sleep at night in case somebody does get hurt. You really, if it's your property's fault in some way, you want them taken care of. It's not like you're trying to keep that money away from them, but if you don't have it there for them to draw on or to get, then it could come out of your pocket, or you could just feel bad your whole life and that they can't walk and they only got $300,000 or something like that. So it really, and a true umbrella, you know, on a corporation or on a personal lines will protect your vehicles too. So if you get in a wreck, you have a certain coverage liability on your car, and then anything above that goes towards that liability, that umbrella's coverage.
So I'm gonna combine two questions here now, Bill. So going back to my original scenario of having, you know, transferring title of the property to rental LLC, and I have an umbrella policy for personal. Do I need a separate umbrella policy now that I've added my LLC to my original insurance policy, or my one personal umbrella cover everything?
Your personal umbrella is going to cover that. And I say most of the time, it depends on what company that you have. We have a standalone umbrella that will cover even when they're on the LLC. And so we just send that notification over to them that they're adding this LLC to one of their properties, and they're fine with that. So sometimes on your homeowner's insurance, because your umbrella on your personal lines comes either from your homeowners, your personal homeowners, your personal auto. And so sometimes they don't want those LLCs, but there's definitely ways around it. It's not hardly any more expensive or lower cost, you know, either way. So.
Now, for landlord policies or for situations where landlords, actually, I'll just use Jenny May, for example. So I use a property manager. Jenny self-manages. I've always viewed property management as, like, you know, an additional buffer for just liability, because they have a professional responsibility to help handle things. But for people that self-manage versus, you know, people that hire property managers, do they have different insurance needs, since Jenny's more active and I'm less active? I think that's the best wording, but does that make sense?
Yeah, so I would think that, and I don't work with any property managers per se, you know, like, except personal property managers like Jenny. But I'm guessing that they have a certain amount of E&O insurance, professional liability, that if they do something like, I don't know, discriminate against somebody or a group of people, that.
Well, can I give you an example? I looked like
Yeah.
one property, and the property manager, we had a property under contract, we did our inspection, and there was like a 16-ounce hammer on the roof. And one of the tenants came out and said, "Hey, I've called the property manager like 5 times to remove this hammer from the roof because I have 2 kids that play out here." That's very negligent. So I mean, that's an extreme case, but like, not so much the property manager, but like, since Jenny is self-managing, does she need additional liability since I've got the property manager as a buffer there?
She could. I mean, it's always, I mean, insurance is a weird thing. You always want more insurance than you need. And you always, you hate paying it every month. I mean, because there's nothing warm and fuzzy to it, except it might help you go to bed a little bit easier every night if you're properly covered. But you're right. If they called the property manager and the property manager noted, "Oh, we need to go get that hammer and then 2 months later they still haven't got that hammer off the roof and it falls and hits somebody, what's going to happen is your insurance company, you'll file a claim probably on your liability. They're going to go after their insurance company to get reimbursed for that, basically. And so, but I think you probably should have just as much insurance as Jenny,
Okay.
being a property owner. So
We might have to compare insurance declarations later. So we
Yep.
have a really fun time.
Oh, I've been loving, by the way, like this last year when rates were so low with refinances, like we were getting notifications from Jenny's loan officer about every week with a new mortgage clause.
Yeah, definitely refinanced quite a bit this past
Oh,
year.
yeah.
So that kind of leads into the next question is probably once a year, I ping Bill and I ask him to shop around for insurance policies. So I was wondering if you could maybe explain kind of the process for that and just comparing apples to apples and if there's anything that landlords need to know in regards to that.
So with us being brokers, that works for us really well because we can just look at other carriers and see what it is. It's like really getting a new policy brand new every year because you're looking, we make sure, if at all possible, that we keep the properties at the same coverage or better to save you money. So we would hardly ever tell you, like, oh, I can save you money with half the coverage over here. Most of the time it's like, no, we'd stay with that current, partner that you have. Insurance never, in Colorado, insurance never goes down. And so, and what I mean by that is if you stay with a company, there's hardly any benefit to that company that they're gonna give you a benefit because you've stayed with them 1 year, 2 years, 3 years. Now, we have seen where with the new company, if you've been with the old company for 3 years, they're going to give you a little bit bigger discount because they think you're going to stick around a little bit longer with them. So, but it's not a big enough discount to pay more for 3 years in a row than you can just by going to somebody else and saving that money on a yearly basis and keeping that in your pocket. So we just, we look at the policies on a year basis. We have a system that tells us, hey, the policy is coming up in 25 days. Take a look at it. Let's see what their renewal is, what we can find them on the other market. We're a little bit limited to people who do landlord insurance, to people or businesses that don't, or insurers that don't. And so, but on homeowners insurance, we really just keep a really good look at that on a yearly basis. On homeowners and auto, it's easier. But we just go out and we shop it every year and just see what we can do. So yes, it means it's not going to take anything away from you. It's going to add, and if it does take something away from you, you're going to know about it, before we switch others. So.
Great. Bill, this is so incredibly helpful to understand the whole process for insurance, just because it is such an important feature of being a landlord. So I really appreciate you coming on and explaining everything and answering our really off the wall questions for you. But yeah, we greatly appreciate it. Thank you so much.
Well, I appreciate you guys letting me come on and show you what I know and you ask me questions, because we get to share this all the time, but sometimes we don't get to share it for the masses. And hopefully this goes out to 1 million people here in Colorado. So.
It will, and we'll probably start compiling a list of insurance questions and maybe bring you back on here in the near future to do the rapid fire round with you, Bill. So my 2 final questions is, how can people reach you? And even though you're in Springs, do you just do Springs, or can you write policies all over Colorado?
So I'm licensed in the state of Colorado, so I can write anywhere.
Okay.
and that's not a problem. It doesn't matter where you live. Here in Colorado, we'd love to help you out. You can get a hold of us two different ways: 719-930-7855, 719-930-7855. Bill at completeprotectioninsurance.com is our email. Bill at completeprotectioninsurance.com. And then we also, we use our Facebook a lot. So if you want to go to at Complete Protection Insurance, and you can ask us any questions there also. And we have funny memes. I don't know how to get. So
Awesome. And for our listeners out there, we'll definitely put that in the show notes to make it easy for you. Bill, thank you so much, man. This has been great. So we appreciate it.
thank you for having me. I appreciate it. You have a great day.
Thanks, you too, Bill.